New Bitcoin Treasury Company is about to buy 42,000 Bitcoin. The CEO, Jack Mallers from Strike, is funded by SoftBank and Howard Lutnick, the Secretary of Commerce's company, Cantor Fitzgerald. This is huge news, and I'm going to get into exactly what is going to happen here, what is planned to happen, and maybe this is part of why Bitcoin's price is ripping upwards. So this is a post here. There's lots of news articles on Twitter. Jack Mallers will make 21, which is the company, the third largest public Bitcoin treasury company after they buy 42,000 Bitcoin. And we can see here, there's this interview, which I'll link below, of Jack Mallers actually talking about this. He is the CEO of the Bitcoin company Strike, and now he will be the CEO of this company, which will have a public ticker symbol XXI. It currently is under the ticker symbol CEP, and it is going to do a SPAC and basically transform into this ticker symbol. I've actually got all of the filings here, the SEC filings to go over, but you can see here, Jack Mallers, this is the SEC.gov. This is all official stuff. So Jack Mallers is the CEO. We got the chief financial officer here, Steve Meehan, and we got all sorts of different stuff to go over. But essentially what they are trying to do is create and replicate the MSTR strategy. So they'll be buying Bitcoin, adding Bitcoin per share, so increasing the amount of Bitcoin holdings, even though they could do dilutive type activities. It will always be about buying more Bitcoin and holding more Bitcoin per share. So ultimately, the way they'll do that is through maybe equity issuance, but also debt creation, which, as you know, a large part of the fiat problem that we have is the debt and credit creation, and that actually devalues and debases the currency. They'll be arbitraging that fiat system by getting really low corporate rate debt in different financial instruments and being able to buy the hardest, soundest money that is still in its adoption phase and will outperform and increase faster in value than the debt payments that they have to pay. So it's just a very simple, you could look at it as a very simple currency arbitrage play with added layers of complexity on top of there for how they acquire the Bitcoin and how they finance the acquisition of Bitcoin. So let's get into this filing here. There's a ton of information. I'll try to condense it and just share the prudent and important information, and I'll read some of the stuff out here. So 21 Capital Inc. is a purpose-built vehicle for Bitcoin investment through the public equity markets, unlocking a potential compelling opportunity for value creation as an innovative company with multiple Bitcoin-focused business lines. So this could really develop into a lot more than just buying Bitcoin and issuing debt, right? We don't know, and there's a lot of speculation to see what this will end up being. Number 2 here, the Bitcoin thesis. Confluence of factors, including growing adoption by institutions and governments, elevated levels of global inflation, ongoing geopolitical instability, and the possibility of regulatory clarity are driving increased interest in Bitcoin. 3, 21's value proposition. Launching with the third largest corporate Bitcoin treasury of 42,000 Bitcoin at closing. So they are launching from their SPAC. They plan to have 42,000 Bitcoin at closing. Whether they've bought that or not, we'll have to kind of figure out. Maybe that'll show here in these filings. But potentially that's a huge bid on Bitcoin. 42,000 Bitcoin is a lot, so we'll see. 21 plans to leverage its Bitcoining to generate returns for its shareholders and benefit from Bitcoin's potential for price appreciation. Okay, so how do they plan to leverage their Bitcoin? That's very interesting. And they're going to generate returns for their shareholders using their Bitcoin. This is getting very interesting here. This isn't that isn't, I mean, Strategy is doing that. They are leveraging their Bitcoin. They have turned it into financial products. It isn't secured, like the loans, the convertible bonds, all of this is not secured by their Bitcoin. But the only reason they can do that is because of the strength of their balance sheet, which is because of their Bitcoin. So is that what 21 is going to do? Or are they going to more directly leverage it using some sort of lending product or something like this? And what's interesting is Cantor Fitzgerald and more so Howard Lutnick, who was the CEO, had to step down to become the Commerce Secretary for the Trump administration. He talked about how he wanted to basically create a Bitcoin bank and create lending products, and they hold all of Tesla's Bitcoin, I believe, and so they are huge players in Bitcoin. And as you can see here in this next line, they will be, they're a big part of this. So let's see, at closing, 21 will be majority owned by Tether, the world's largest stablecoin issuer, and Bitfinex, with significant minority ownership by SoftBank, one of the world's leading technology investment companies. If you don't know what SoftBank is, they're a Japanese investment firm that has, they actually got burned by FTX, but they've invested in a lot of Bitcoin and crypto stuff. And Bitfinex is a large exchange. Tether is the world's largest stablecoin, as they implied here. And they also hold around 100,000 Bitcoin on their balance sheet as a private company as well. So let's see here. Investment opportunity. 21 is targeting 585 million of total financing, consisting of 385 million of convertible debt. So they plan to do a convertible debt offering to finance part of this. 200 million of equity. So they will sell percentage of their ownership stake through equity shares, and to be announced concurrently with the company's business combination with Cantor Equity Partners. Cantor Equity Partners is the SPAC that is basically forming this company. And a SPAC is a special purpose acquisition company. So they get funded, they go public as a SPAC, as an investment vehicle, and then they buy into a company and invest in that thesis of a company, and then they change the ticker symbol. So it's a way of going public that goes around a lot of the other types of regulations and hurdles of becoming a public company. So investment opportunity continued here. Investors would get an opportunity to purchase equity at a 1x multiple of Bitcoin net asset value, where other companies pursuing a Bitcoin treasury strategy regularly trade at a premium to their net asset value. So this is the initial investors that are buying into it. They're going to be able to buy into this company at a 1x multiple. So only the Bitcoin that they have on their holdings, and they plan to acquire more Bitcoin over time. So this, this is probably a really good investment for these early investors that can buy in at this kind of stuff here. So if you don't know who Jack Mallers is, he's a really great spokesman for Bitcoin. He's the CEO and founder of Strike, which is a great Bitcoin company. This guy here, Steve Meehan, I don't know who this is. Looks like he has 25 plus years of financial and operating leadership, publicly traded life science company. He served as a CFO on. Looks like he's just kind of the chief financial officer suit kind of guy that fits in one of these roles. So why Bitcoin and why now? This is really just talking about things that if you're a viewer of this channel, you probably already know why somebody would want to buy Bitcoin, or why a company would want to buy Bitcoin. The accounting reform FASB, so Bitcoin can now be marked up to its fair value, has a limited supply, it's growing in adoption. There's more institutional and sovereign adoption, so it's becoming ever increasing competition to access the limited supply. Superior historical performance. This is the compound annual growth rates of Bitcoin versus S&P, Mag 7, gold, real estate. more adoption through ETFs, and they're still claiming to be early to Bitcoin, which I actually agree with. This is a really great graph here that just shows how the total value of real estate here, total value of the bond market, equities, fiat currency, gold, all of these things are so massive compared to Bitcoin, which is 1.6 trillion, which is actually like 1.8 now. So they need to update their charts. This is as of December 31st or something like that. Yeah, so obviously it's slightly outdated, but you can see that Bitcoin has a lot of room to grow if and my belief is that all of these assets are going, a part of them will go into Bitcoin. It's not going to take directly or completely from one specifically, but it'll take a varying amount from each one of these. This is a pretty good graphic talking about the performance of companies who have adopted a similar type of strategy. And of course, the number one here is strategy. And you've got to have a strategy, a Bitcoin strategy. So a lot of this is about MSTR. They're the longest running of doing this and the most successful so far, just with the most historical track record. All right, so this is the offering for the investors that are buying in pre-IPO or pre-SPAC merger. Pricing date happened already. Issue date upon close, deal size 200 million of non-voting Class A shares, and the sole placement agent is Cantor Fitzgerald. They're also doing a concurrent convertible bond note of 385 million convertible senior notes offering. So they're raising what is that? $585 million to form this company, and it's all of a sudden happening. That's what's so interesting about this is we've been talking about Bitcoin treasury companies on this channel for quite a while. We've seen, strategy turn from a very small, relatively small company into a much larger one adopting this strategy, and we've since seen a lot of similarly starting sized companies adopt this strategy and grow from there. We've also seen Bitcoin miners adopt a HODL strategy, but this comes out of the blue because this is just a SPAC, a company that is just being formed with one objective, which is acquiring more Bitcoin and adding Bitcoin per share, using that as their key metric. And these kind of things, like you can see, okay, well, is Meta going to adopt Bitcoin? Is Tesla going to buy more Bitcoin? Is MetaPlanet going to significantly increase its Bitcoin? What's strategy going to do? But all of a sudden, this kind of comes out of the blue that there's a company just with its sole purpose of running the strategy playbook of buying Bitcoin. And this can significantly increase the amount of institutional ownership of Bitcoin and therefore drive its price up and therefore make it more difficult for all of us to buy Bitcoin at lower prices in fiat denominated terms. So this should be a wake-up call that the suddenly happens. This is something that I would say is more sudden than the gradual week-over-week increase buys of strategy and the other Bitcoin treasury companies. This is all of a sudden a new player in the market. They're starting at a $500 million valuation, but will they grow at that, right? Like how much will they grow beyond that? Or I should say that's how much they're buying of Bitcoin. Some of that is debt as well. So their market cap can fluctuate like crazy, but their goal is to buy more Bitcoin. Okay, so here is the operational business plan. This is actually going to give us some more information about what they plan to do with their Bitcoin. And I think this is something that should be really considered and understood before you end up buying into any of these publicly shared, the public shares that will hit the market very soon. So 21 will deploy a Bitcoin accumulation and management strategy with the following mandates. They're acquiring Bitcoin, actively manage Bitcoin holdings, issue debt/equity securities for Bitcoin purchases and operating expenses. So that 100% is the Sailor playbook. Number 2 here, 21's mission will be to accelerate Bitcoin adoption and Bitcoin literacy at both, of course, I can't read the word literacy, at both institutional and retail levels. Create, license, and produce modular educational content, branded video media, act as the go-to content partner for major conferences, Web3 firms, fintech institutions. Gotta love the Web3 firms in there. Bitcoin financing. So beyond that, 21 expects to engage in a range of Bitcoin-related activities, including Bitcoin-related financial and advisory services, offering Bitcoin-related debt and equity structured products, Bitcoin-related lending. Okay, so the offering Bitcoin-related debt and equity structured products is similar to what Strategy is doing with their convertible bonds, the Strike and Strife preferred stock offerings. And this is kind of interesting too, Bitcoin related financial and advisory services. I don't know how much really they can bust into this. I mean, there are some companies out there that do this already. Maybe they can take a market share from those, but they're relatively small companies. I mean, even myself, I'm a Bitcoin coach, and this is, this is part of what I do as well. So we'll see how that goes. Bitcoin lending, Bitcoin related lending is an interesting one. I think what we've seen here with a lot of the Bitcoin lending products is the interest rates are really high on them because they cannot tap into the traditional financial markets where the interest rates are much lower. So if Bitcoin becomes more institutionalized in this way, and these people seem to have all the ins where they need to have them to really facilitate lending at a much more traditional type strategy. This could lead to them taking market share from all of the other Bitcoin lending products out there now. Of course, I don't advise anybody to lend on their Bitcoin, borrow on their Bitcoin. I mean, I can't advise people either way, but I do know that people will seek that out, and the best product, the best service for that is going to win out, and we'll have to see what kind of product and service they end up bringing to the table. But they do have a lot of research, a lot of education, and a lot of expertise in that field. So I think, and a lot of ins as well. So they might be able to create something very compelling in that space for the people that want to play with their Bitcoins. And I would say that is playing with your Bitcoins. I think the best thing you can do is not play with your Bitcoins and just hold in cold storage, in my opinion. But if you're going to play, you're going to play. Okay, so 21's strategic advantages. Okay, so let's see what they have here. So 21, it's a pure play Bitcoin exposure. So they don't really have an underlying business that is unrelated to Bitcoin, is basically what they're talking about. They're going to use leverage to acquire Bitcoin, and they're going to strategically accumulate more Bitcoin with an overall ranking of an entire piece of pie here. There's a little chunk of pie out of here for Bitcoin treasury companies because they're not a pure play. We can argue if that's good or bad. Bitcoin is just pure play. They don't have the other parts of this old pie. ETFs, again, I would take an extra little chunk out of there because it is not, it's not real Bitcoin. I mean, none of this really is except Bitcoin. So really that deserves, that pie should be 3 times the size maybe for Bitcoin only. Bitcoin exposed corporates. It says here they don't use leverage, I guess. That might be true. And Bitcoin miners here as well, half the pie as well. So this is kind of a little bit misleading, a little bit, subjective, all that kind of stuff, but we'll see here. And again, they're comparing 21 to Strategy here. Bitcoin native operations, Strategy doesn't really have any. They tried at one point with the orange dot, I think it was, which would have created some sort of internal ID system using the Bitcoin network. They basically scrapped that as far as I know. Existing debt balance, debt collateralization, inside ownership, purpose-built KPIs. I mean, yeah, we'll see. I mean, 21, this is their main competitor here, Strategy, and they're going to have to come out swinging to take any degree of moat away from Strategy. I mean, they can become, off the bat, they can become the 3rd largest holder, but they still have less than 10% of the holdings of Bitcoin that Strategy does. So Strategy is pretty far ahead. They're very liquid with their equity. They're very liquid with their options, with their convertible bonds, with all the products that they've structured. Their Strike and Strife preferreds have become quite popular as well. Will Will 21 be able to compete? Will 21 be able to take some of that away or continue to grow that pie of interest from different buyers for those types of products? We will see. Okay, so illustrative transaction structure. This is a little bit complicated. Let's see if we can break this down. So at announcement here, Tether and Bitfinex agreed to contribute 31.5 thousand Bitcoin at closing. So they will sell the Bitcoin directly to them. So that's that's probably like an OTC type deal. That's maybe, won't even go on exchange, but it goes in as part of their ownership. They will contribute Bitcoin directly by the looks of it. Within 10 business days, Tether purchases incremental 462 million of Bitcoin to be purchased by 21 upon closing of PIPE and convert financing. Okay, so at close, they've contributed that. The PIPE investors contribute 200 million of cash and BTC to SPAC in exchange for SPAC shares. SPAC merges with and into SPAC merger sub. SPAC shareholders receive 21 Class A shares in exchange for SPAC shares. Tether and Bitfinex receive Class A and B shares in exchange, so that probably has more voting and ownership attributed to it. Convert investors contribute 340 million of cash in exchange for 21 convert bonds. 21 purchases BTC with Step 1B using proceeds from Step 2B and Step 5. So Step 5 is the money from the convert. Step 2B is the cash from selling it to the PIPE investors, the SPAC shares, and they purchase Bitcoin from Step 1B, which is Tether purchasing incremental $462 million worth of Bitcoin, and they'll buy that from Tether directly. Number 7 here, SoftBank purchases 21 Class A and Class B shares from Tether to purchase price based on value of 10,500 BTC plus interest. If necessary, Tether sells additional BTC to 21 in exchange for 21 Class A and Class B shares. This is quite interesting. So this is a visualization of that. It doesn't really help me that much. Reading it probably is a little bit better, but you can kind of see here, this is where it all starts, and it goes into here, it creates this new company shares, and then from there it goes to here actually, where 3A happens, the SPAC merger turns into 21. So new company merge with the SPAC, and also 21 is formed right here, and 21 Class A shares go to the SPAC shareholders. And right here, I missed this. The PIPE investors buy the SPAC shares, injecting cash into this. And then from there, the 21 shares go to Bitfinex and Tether, and the converts go off to the convertible investors here, and cash comes in. So that's basically the structure, the financial structure on the get-go for the 21 company right here. So these are Bitcoin contributions, illustrative sources. Tether, Bitfinex, Tether on behalf of SoftBank. So SoftBank is borrowing those shares from Tether and will pay them back initially. This is in millions. This is in total amounts of shares. And it's just it's going to end up being 42,000, and then they'll continue on from there. So here are the pre-convert ownership. This is kind of interesting. So Tether's actually going to own 46.6% with a 51.7% voting. So this is actually going to be a Tether-run company, basically, of strategy, because they have the vast majority of voting shares. Bitfinex is going to own 17.4% with a 19% voting. SoftBank is going to own 26% with a 29% voting. So I guessed, and then we got here ownership from the public SPAC shareholders are going to own 2.9%. The PIPE investors are going to own 5.9%, and then there's some sponsorship ownership to the sponsors. Then post convert, it looks similar. The ownership just goes down a little bit and spreads out to more of the convertible note holders, and that affects the skew of ownership for everybody else to some degree. But the voting stays the same, so the decisions stay in the hands of Tether at this point. So we'll see kind of what happens here. Tether is a controversial company in some ways. Some people find a lot of controversy around it. What my opinion is of this is they've partnered with other firms, other people. They've created a sub company that is not directly connected to their stablecoin company that is just issuing stablecoins and buying Bitcoin. They're putting a percentage of that in a treasury, a strategy type company, and owning 51% of the voting shares and a large percentage of the ownership as well. And they'll just allow that business to grow separately, and Tether will just become more and more powerful and hold a lot more capital throughout time as they acquire Bitcoin. They're starting to make a big bet on Bitcoin. They're mining Bitcoin using Ocean. They're moving some of their stablecoin issuance onto the Lightning Network on Bitcoin. So you can tell that these people really do understand and believe what Bitcoin is. And you can see that by where they put their money and where they put their time and energy. And creating a company like this is very, very interesting. I don't know how much shareholders will move from strategy into something like this. And of course, what's good for strategy is the price of Bitcoin going up, as they are the largest corporate holder. So by a company like this coming into the market and acquiring more Bitcoin, that's just going to be more demand, and that's going to push the price up, which it pushes the price up of strategy and makes their strategies more effective as well. So it will be a net positive for Bitcoin. I mean, we got to think of everything as everything is good for Bitcoin. And if everything's good for Bitcoin, then it means that the largest corporate holder of Bitcoin will benefit from that as well. So there's a lot to this. There's a lot more that will develop. We'll stay on this story a little bit. I will continue to research it, continue to follow along, and continue to do updates on this. And would love to hear from you guys if you have any questions about this specifically, if you want me to investigate a specific area of this story at all. And the YouTube comment section is the place for that. And I'm a Bitcoin coach, so if you guys need some help with securing your Bitcoin, understanding something about Bitcoin, I can help you out. You can check out the link in the description to book a coaching session with me. And if you guys want to buy some Bitcoin, I recommend checking out Bitcoin Well. If you use my code in the description, you'll actually get some free Bitcoin on sign up. They're a non-custodial exchange, and they have non-KYC options available and the lowest spreads in the US and Canada for a non-custodial exchange. You can also use Stampseed titanium seed phrase to preserve your seed phrase for future generations. And you can get 15% off of a kit using my code BTC Not Crypto 15. We'll see you on the next episode of Bitcoin Not Crypto. Thanks everyone,